Dear colleagues, dear friends, dear all, thank you very much for your presence tonight. Last year, during our annual conference, the entire European quarter was fully blocked by farmers' demonstrations. This year, we learned in December that ESMA was about to organize its annual conference in Paris on the 5th of February. And this morning, all the public transportations in Brussels, or almost all, were fully blocked. So, today is an important day, or at least quite a challenging day when it comes to organize events in Brussels. But you are here, and so I'm very pleased to welcome you to this 2025 AFG conference on the role of asset management in the sustainable competitiveness agenda announced by Ursula von der Leyen last summer. Last year, we had the opportunity to exchange with Enrique Rutter on the concept of the strategic autonomy, notably for the EU. Now, I guess that we all agree that the time to act is now. That's why I'm glad to hand over to Philippe SETBON, the chairman of AFG, the French Asset Management Association, and Philippe SETBON will make the introductory speech of this conference. Thank you very much.
Thank you, Marie. Ladies and gentlemen, good evening. Welcome to all of you to our annual conference here in Brussels. This is an important moment because this is a moment in which we are going to speak and we are all together in order to discuss about the competitiveness, not of the asset management industry, of the European economy, and what is the role, what could be the role of the asset management industry within as a contributor to this, let's say, global competitiveness, which is just key, just key. Because finance, let's say finance as a whole, and asset management are not just a concept, or let's say invisible actor, as we sometimes we call it in France. But we are just there for enabling business to grow. So it is what channels savings into productive investment. And the strong competitive financial industry is just essential to provide European savers with the right product and the right solutions, more and more solutions than product, in fact, to ensure the businesses from SMEs to global leaders have the financing they need in a sustainable way, and to preserve also European sovereignty, because at the end of the day, we just speak about sovereignty. So we should not make any mistake when we speak about, let's say, competitiveness, finance, blah, blah, blah. European financial strength is just strategic for Europe, exactly as defense is also strategic for Europe. So we call for this wake-up of Europe already for years, and we are very happy to, let's say, to notice that it is now in the hands and in any speech in Europe. Very happy for that. Just a year ago, as you were just reminded us, Louis-Marie, we are already there in Brussels for our conference, and we were sounding the alarm on the unprecedented challenge, I would say, facing European Union. Europe must navigate ecological, demographic, and digital transition, aging populations and rising pressure on retirement systems, of course, and as a consequence, a massive investment gap that threatens our global standing. The European Commission itself estimates to about 745 billion, let's say 750 billion annually, the cost which will be required by 2030 to meet these challenges. So this is not tomorrow, after tomorrow, in the future. This is today, and this is the reason why
we have to act today. Since our last conference here in Brussels a year ago, we had the pleasure to have and to contribute as well to Noyer, Letta, and Bruegel reports, reinforcing two urgent imperatives. Redirect private savings into European corporates, securities, to boost competitiveness and finance European future, first point. And secondly, build, of course, strong long-term saving solutions as the public replacement rate decline. For sure, we absolutely need to create in Europe, and this is, I would say the roadmap is very clear. We need to create in Europe the virtuous cycle which has been created in the US already decades ago, which is savings, investment of savings in innovation, transition, let's say at the end of the day in corporates, so improving the profitability of the corporates, making, or let's say offering higher returns, investing in the economy, and the higher return, let's say, drive new savings and additional savings. So this is the virtual cycle, and this is exactly what we need to create in Europe, and which does not exist at all for the moment in Europe. Not at all. So sorry to say that, but we have everything to be built in a very short period of time, but I think we are all committed to do that. At the 2025 World Economic Forum last month in Davos, European Commission President Ursula von der Leyen delivered a stark warning: 300 billion euro in private savings leave the EU every year. Okay, fine. We all have that in mind, but what do we do with that? Because this is just a structural failure. 300 billion leaving EU every year for, let's say, investing and financing innovation and transition everywhere in the world, but not in Europe. This is just a structural failure. And sorry to say that, but it has nothing to do with the cost of the product, with the cost of the asset management. Nothing to do with the cost. It has to do with the expected return that you have coming from the savings. So, of course, we welcome the European political priorities on competitiveness and simplification as well, but welcoming priorities is not enough. We need action. And if we want to build a strong financial economic system, and this is what we, of course, what we want to build and what we need to build, we must stop the accumulation of regulatory burdens that weaken rather than strengthen our industry. I will just take an example, and I will speak about just a few words about retail investment strategy, but which is just a new step in the wrong direction. Just a new step in the wrong direction. So before maybe thinking about simplification on what exists for a decade, maybe we can just stop, let's say, the accumulation of new rules which are going in the wrong direction. And because why? Of course, the objective, let's say, to both retail investor participation and protection of the savers are commendable, for sure. But instead of encouraging participation, they introduce new barriers. Instead of fostering innovation, they create, let's say, additional red tape. And instead of strengthening European financial sector, there is becoming yet another brake on our competitiveness, no doubt about that, by introducing price regulation while increasing the cost of doing business in Europe. This is exactly the wrong way. This is the opposite way that we should do. And this is the reason why, at AFG level, we push for bold and pragmatic reforms. Bold and pragmatic reforms. First, simplify regulatory framework to make the EU a more attractive place to invest. This is just This is just basic, just basic, how to invest in euro in a better way and to attract new investments. Create an invest.eu label, I would say, for national saving products. We need to support by favorable tax treatment to encourage long-term investment in Europe. And also, let's say, to start creating, implementing this virtual cycle I was speaking about. You need tax, let's say, treatment, tax advantage at the beginning, at least for, let's say, starting on the engine, just starting on the engine. And in five years' time or 10 years' time, we will stop this tax advantage. But at the beginning, you need that in order to create the cycle. These are just real and achievable solutions that can bring real benefits to savers, business, and European economy as a whole. In order to, let's say, to participate to the proposal and not just to, let's say, to say we should not do that, we should do that. No. In order to participate to the debate, we release today two important studies that reinforce this agency. The first one is the European Savings Observatory study. This report analyzes the incentives for long-term savings across member states, and it tries to identify the concrete opportunities to boost household participation in the stock market. And the second one is the AFG study on the asset management industry, highlighting the fact that the member state with strong asset management sector investment on the, let's say, in their countries, invest a lot in EU economy, much more than the one, let's say, which are located abroad, for example, just as an example. And the second one is that and this is the key point, let's say, among the investment performed by these firms, the SMEs are strongly favored also by these firms which are located geographically in these countries. So this is just key, because otherwise we will just, I repeat, we will just continue to finance, and why not? But this is a choice. We will continue to finance innovation, transition abroad, and we will just have to buy any product made abroad, but it is not a sustainable model. It is not a sustainable model at all. If you are just a population of customers and not producers, I don't know how long it could last, but it will not last for long, that's for sure. We have the capital in Europe. We have the capital. We just need to ensure that it is invested in Europe in the right way. And investing in Europe in the right way doesn't mean that we have to protect Europe or that we have to, let's say, to forbidden any investment abroad. Not at all. Competition is there, and competition has to remain there, open competition. But at least at the beginning, as a minimum, we need to ensure, let's say, this level playing field between the competitors. And this is not the case for the moment. So this is time to act. AFG is fully committed to driving this transformation, because we must channel long-term investment into European economy. We must remove regulatory and structural barriers, and we must reclaim the capital and the competitiveness we are losing on our soil. The path forward is very clear, and I remember that we had already this speech and ideas for years and years, Eric. By aligning policymakers, industry leaders, and member states, we can build a strong European savings and investment union. But we cannot afford to wait. This is time to act. We strongly expect Europe to move now. We are ready to support this movement. Thank you all, and thank you for all your contribution to this big move that we have to make all together. Thank you.
Thank you very much, Philippe, for this insightful speech, for this analysis and the different proposals you just made. And I'm sure that a debate just after could occur on those proposals. Now I've got the pleasure of calling Mrs. Stéphanie Courtin on to the stage. Honor for us to have you for this conference this evening. I'm not sure it's absolutely essential for me to introduce yourself, but you are a member of the European Parliament since 2019, where you have a key role. You are notably Renew coordinator within the Economic and Monetary Affairs Committee. You are Vice President of the Fisheries Committee. You are substitute of the Internal Markets and Consumer Protection Committee. You are, of course, rapporteur of the so famous retail investment strategy, shadow rapporteur on FIDA, and you have been deeply involved during the previous mandate on the DMA, the Digital Markets Act, that has been adopted during the previous mandature. So, what people may be less aware of is that despite all those responsibilities in Brussels, you have maintained a strong involvement in your region, in Normandy. You are regional councillor in Normandy, and you were the mayor of a small city in Calvados for a few years. Calvados. And we know, that's why we understand now
later.
And we know that keeping contact to the field is something really important for you. Mm-hmm. So thank you again for your presence tonight and for your time. And I'll let you start your keynote speech. Thank you.
Thank you. Thank you, Louis-Marie, dear all. First of all, I'd like to thank the AFG and particularly its chair, Philippe SETBON, for the invitation to speak at this very important AFG's 2025 annual conference. And also, today's discussions will focus on the role of asset managers in strengthening the EU's competitiveness agenda. I think the broader implication extend well beyond this sector, as you highlighted already, shaping our wider goal of building savings and investments union. As we await the proposal for this savings and investment union, now is the time to engage and gather input on how to move forward collectively. And this is what we are here to do today. I don't want to appear overly pessimistic, but the reality is that our situation hasn't improved. And talking some minutes ago with Nicolas VERON about the other side of the Atlantic doesn't make me much more optimistic. In some aspects, I think the situation even deteriorated. Let's be honest. The numbers have not changed. We still need over 800 billion euros per year to achieve our European goals, according to Mario Draghi. Some people may put these fingers up. And the green and digital transition only, now we speak about defense and many other challenges, only green and digital will require more than 700 billion euros per year. And in the meantime, the sense of urgency to scale up, as I said, defense spending in the EU is growing stronger and stronger. And now add to all of this new explosive element, which is a second Trump mandate that brings new geopolitical tensions, amplifying the urgency and our challenges. And Europe is at a tipping point. It's up to us collectively to build up our competitiveness, and it starts by mobilizing the public, rare and private financing. We need to tackle the changes we are and we will face. And the AFG report that will be published following this conference outline definitely some interesting points in this regard. Europe is losing ground because of the increasing influence of non-European asset managers in the EU. And this is precisely where our competitiveness agenda must step in. Indeed, EU asset managers already predominantly invest in the EU, so if we empower them, if we give them the tool, then we nurture our economy on the longer term. And I think they're ready for it. If the outlook seems gloomy, I think the bigger picture still offers hope. Well, without hope, we wouldn't be there. Because we are in the capacity to implement the changes we need to boost our strategic autonomy and competitiveness. So now, how do we do that? This is why today's discussion is, I think, very timely. And in my view, we need to work on at least 3 S's. Not only because my first name is Stephanie, but I think, and Philippe rightly recalled, simplification. But simplification is sometimes quite hard, because for Musk it doesn't mean the same that for us. For him it's more deregulation or scrapping everything. So simplification which goes hand in hand with competitiveness. Second S, the savings and investment union. The third is the fact that we need to continue working on our favorite strategy, which is, without surprise, the retail investment strategy. So first, let's start with simplification. We can't win the race against other economies like the US if we remain stuck in the status quo. Change is necessary, we have passed legislation, and now with implementation, it's time to adjust and simplify. And the current issues are the following. Companies are drawing in administrative burden, slowing their growth and innovation potential, and new ideas and innovation may not even emerge as the obstacles to starting a business are simply too high and citizens aren't investing at the same time. And yes, this is due to many reasons, but we are not doing enough to make it easier for them to understand why they might want to do it. And don't get me wrong, European standards and reputation are a strength. They are. But this mandate must focus now on implementation, on delivering, on adjustments, where and each time it is needed, at each stage of the legislative process. Another is the time to simplify processes so that our efforts have a greater impact. Take sustainable finance, for example. Europe has led in this area and must continue to do so, but we must make the necessary adjustments to allow it to reach its full potential for both citizens and companies. But simplification is not the only element we need to work on. More needs to happen. This brings me to the second S, savings and investment union. For a decade now, this has been a myth. There has been a lot of talks, little results, and little actions. Today, things look different. We have the momentum, as we call it in the Brussels bubble, the political will. So let us use it. Let us unite. Let us work together to achieve this goal. Piece by piece, we can build the savings and investment union. It's I think, big jigsaw, big puzzle. Each brick will be key if we all want to play and do a nice puzzle at the end of the day. Some pieces will be more urgent than others. And it's your responsibility, the industry, to tell us, legislators, where we should go, how we should do, all the time throughout the process, as early as we can. And concrete proposals are already on the table, thanks to the efforts of Enrico Letta, Christian Noyer, and Mario Draghi. And these are building blocks that will push us in the right direction, such as securitization, and the EU long-term savings product. But let me come back on the EU long-term savings product, which addresses, I think, a fundamental questions. How do we engage retail investors in the economy? And engaging citizens in investment is not just about funding the European economy. It's about empowering them to be actors of the changes they wish to see in society. Take sustainable finance, for example, like a virtuous investment. But most importantly, it's about providing citizens with new opportunity to secure a better financial future. And as echoed by Philippe, I personally believe that a decentralized approach, as proposed by Christian Noyer, would be the most effective, and in my view, the creation of a long-term savings and investment product holds great promise. The specifics and how we can make this work in practice still need to be explored, again with you. The idea of auto-enrollment and favorable tax treatment is certainly worth considering. And auto-enrollment has already delivered positive results, I think, in the pension sector for those countries leveraging, all these three pillars of pension systems. And this is why it may, I think, be worth discussing further in this context. Last but not least, let me tackle the last S, the need to continue the work on this famous adventure, which is the strategy I have been working on during the past mandate, the retail investment strategy. I have been very vocal since the beginning, and I'm continuing to be vocal on this, don't worry, on my willingness to continue the work on this file in trilogues. You can count on me to carry the simplification agenda during this period, and after all, this is something, at least it's a good start, we all share with the Council, with the Commission, and with the Parliament. But don't get me wrong, it's not about erasing everything that we achieved. It's about finding a better, a more effective, an easier way to implement the rules and principles that the negotiating team in the Parliament and the Council respectively decided on. And it seems that people prefer the European Parliament's position, which in my view is not a big deal, since I appear to come from the European Parliament. Nobody's perfect, but this is the way it is. And again, as this will be a complex topic, which will require many discussions, I am calling on you to send me your input on simplification. It's always very variable. It's variable at the early beginning. It's variable during the discussions before the votes in the Parliament, in the Council. Again. As you know, this text touches upon other important topics like the need to empower also citizens through financial literacy, but also to protect them against misleading information such as doubtful investment opportunities. And with the crypto frenzy of the new US president, I'm thinking about having my Bitcoin myself. Don't know whether I would have much success, more success than Melania or Donald, but I think anyway we must be cautious about misinformation circulating around that, for example. And I will stop here because we will have, I think, enough time in the future to discuss, and I really hope we will have time to discuss. I should have had a fourth S, which is sovereignty, but Philippe already discussed that, and I'm sure the other great speakers will touch upon that. So to conclude this, I think we really need decisive action now. And it's really time to move beyond the status quo and reclaim our competitiveness. We can't let ourselves fall behind while others move forward just because we delay and because we have delayed the necessary transformation. We have the determination, we have proposals coming soon. So now it's time to make meaningful progress, concrete one, together in a pragmatic way. And because the future is ours to shape, but the present will start and is now. So thank you, and thank you for your very valuable input. We're still at your disposal, and I wanted to introduce Nelly, who is doing a great job in my team. So Everybody can call Nelly now. No.
Thank you very much, Mrs. Stéphanie Cortin, for this enlightening speech. I've noted your 4S, simplification, savings, strategy, sovereignty, and a strong interest also for any EU long-term products. Now I call to the stage Isabelle Gonin-Lévy, who is a French TV journalist at LCI, and who will moderate and introduce the panelists.
Thank you very much. Thank you, Louis-Marie. Good evening, everyone. I'm very happy to be among you to lead this roundtable. And so I'm therefore pleased to call Fanny Wirtz, Vice Chair of AFG, Deputy CIO, MUDM, Head of Distribution and Wealth Division, ETF and Indexing Business Line. Thank you to applaud her. Also, I'm calling Emmanuel MASSE, Minister Councillor for Economic Affairs, Head of the Trade, Commercial and Financial Service, Financial and Trade Affairs, French Permanent Representation to the EU. Gerhard HUEMER is with us, Director of Economic and Fiscal Policy, SMEunited, an association representing European SMEs. Hélène BUSSIERES is here, Head of the Unit C4, responsible for Asset Management, DG FISMA, Financial Stability, Financial Services, and Capital Markets Union, European Commission. And last but not least, Nicolas, co-founder, Senior Fellow, Bruegel and Peterson Institute for International Economics, two major think tanks. Thank you. So let's take to explore Europe's new priorities and focusing on the pressing issue of competitiveness and the widening gap between the US and EU economies. The need for substantial financing has been noticed. You said that in the Draghi, in the Letta, in the Noyer reports. And so what does the role of asset management play now in advancing the European agenda? Fanny Wirtz, as Vice President of the AFG, how do you see the role today of asset management in addressing these challenges? AFG has conducted two studies, one with Deloitte and the other with the European Saving Observatory. So can you comment, please, on that? Thank you.
Thank you, and good evening to everyone. Can you hear me? Yeah.
Yes.
Good evening, everyone. And Stephanie, thank you so much. I think we will all start and be straight to the point tonight and remember simplification, savings, strategy, sovereignty. I think this will be the word of the conclusion, but let's elaborate a bit on. First of all, I'm very happy that we've got more reports to put tangible facts into some issues. And if you allow me in the simplification, I will just dezoom and make sure we understand the purpose of our industry and come back on the purpose of the financial markets. The equity market is here to finance companies, to help them in their development, in their innovation, and at the end of the day, create jobs. We all agree on. The bond market is also here for companies that are not finding, I will say, financing credits into the banking systems to go on the financial markets, and also helping the publics or the governments to find credits. And the money market is here to provide liquidity to the economy. All in all, we all agree that it is concrete finance serving purposes, and to help channeling the savings of some towards the needs to some others. We are very happy, and as said by Stephanie, looking at the glass half full when we look at Europe, we can enjoy and be very happy to have substantial savings and pool of savings in Europe. The issue we have is that 40% of those savings are still in cash deposits and in banks deposits, which is then financing the real economy or corporates or companies. And that, as many of the reports stated, 300 billion every year are flowing out of Europe to finance overseas companies. If I look at the European asset management industry, which is once again at the purpose of financing the needs of some towards, I will say, financing the savings of some towards the needs of some others, we do manage 15 trillion, massive. And one of the commonality of the European asset management industry is that 75% of our investments are directed towards European issuers. We are financing the economy. Good news. But coming back on the two study, what does it highlight? The European markets and the European players are losing ground. In the past 15 years, the market share of European actors has divided almost by 2. As a consequence, the share of European equity in portfolio fell from 50% to 30%, while the share of US equity in portfolio rose from 20% to 50%. We need to have, as we all agree and discuss, a strong European financial systems and players to achieve a very good capital markets union.
So in this context, what do you think, what should be the priorities now for Europe?
And actually at AFG, what we are asking, but in line with what Philippe said in introduction, and as Stephanie said, is immediate, and I will say simple, actions to reverse the trends. The first one is that we need to question the relationship between regulation and competitiveness. We need to make sure that each regulation has a competitiveness focus. As a consequence, there is a crucial need to simplify the rules by addressing the regulatory framework. If we just take the example of sustainable finance, we all agree that we need a framework towards sustainable finance, but it needs to be harmonized across the board. We have too many regulations contradictory to the other, and also not covering the whole information chain. Point 2, on your favorite subject, retail investment strategy. We all agree that we need to have a framework for retail investment. But there needs to be a real simplification. There are too many tests, best interest test, inducement test, that are overly complex and burdensome. And at the end of the day, what will be linked to is that it will discourage retail investors. Today in Europe, it is more easy to buy crypto than to buy any funds financing the real economy. I'm not sure this is all what we want. Second, obviously, we are in the favor of value for money, but we are strongly opposed to any benchmark. Once again, this is too administrative, too complex, and this can actually lead to race to the bottom, and not sure this will be good for innovation, for small and mid caps, smaller companies, neither ESG. And finally, we are once again in favor of value for money, but then let's look at the full value chain.
So if we talk about small and mid caps, what do you think, Gerhard HUEMER, what are the needs of SME in Europe? Do you think they have still access to capital markets, enough access?
Good evening. First, I think if you speak about SMEs, you have to keep in mind we have 25 million SMEs in Europe, and most of them are micro enterprises. There's a very small number which is looking for equity, and here we have problems. But the main problem of SMEs is not access to capital markets, it's access to finance in general. I don't want to speak about loan financing today, so I'm focusing on the 2% of SMEs which may be interested to have access to capital markets. These are mainly SMEs which are startups, scale-up companies, fast-growing companies, the famous gazelles or unicorns. And if you look in this area, you see it doesn't work. It doesn't work. It shows that we have not less startups than in the US, but too many startups scale up in the US, and that's the real problem. And the reason for them, and I agree with everything what has been said by Mr. SETBON and Madame von Körtin, but I would go a step further. When I speak to startups in Europe, they tell me scaling up in Europe takes so much more time.
It's more difficult, yes.
So much more costly than somewhere else, because the deficits, the barriers we have in the single market. And if you have scale-upping is more expensive and takes more time, then also it's less profitable. And then the investments made in these companies are less return and are not done. Because also I don't want my asset manager to invest in such companies if there's an alternative.
So
therefore,
what is the solution? So
the solution is we have to start thinking on the single market. We have to make it more attractive to invest in Europe. The return has to be there. There are problems with the regulatory burdens. There are problems with too much information requirements, etc., etc. But the starting point is the return on investment, and that means competitiveness in the end of the day.
Thank you. Hélène Bussières, what is the Commission position and how do you define the notion of competitiveness?
Thank you, and good evening, everyone. So competitiveness is a concept that we could be discussing for quite some time. I would maybe highlight some important criteria for me to achieve competitiveness in the EU. I think to achieve competitiveness or to increase the competitiveness of the EU, we need to have a robust and stable regulatory framework, which we have in the EU. I think especially in the asset management sector, we have well-established frameworks like UCITS, AFMD that are well-known and recognized worldwide as being very efficient. So I think we have to protect those brands. It's really important. And when we carried out the review in the last 2 years, that was exactly our goal, to maintain the competitiveness of these frameworks. I think another element that is absolutely crucial for the EU competitiveness, as Gerhard just said, is the single market. We have an extremely powerful single market, which asset managers contribute to maintain by investing in the EU, as we just discussed. But I think there are still barriers in this single market. And one of the reasons why we are struggling and why some EU companies are struggling is precisely because when innovation happens in some member states, they face real difficulties, real barriers when it comes to expanding across national borders and having access to bigger markets. So it's really crucial, and that's one of our priority in the Commission and in particular in DG FISMA, to ensure that we work to remove those barriers, precisely to give access to funding, to markets, to customers. That is the first step for our companies to then grow globally, to have access to global markets, because you can only grow globally if you have a strong foothold in Europe, and the single market can really contribute to that objective. Another important aspect of this competitiveness agenda is the capacity to innovate. And here I don't just speak about the capacity of the asset management sector to finance innovation and to finance startups and scale-ups, but I also speak about the capacity of the sector to follow innovative trends, to offer new products, to be able to compete with international peers that are developing new investment strategies. So I think we also have to be mindful that our regulatory framework encourages this innovation and fosters this innovation in the EU, and particularly the innovation of the financial sector. And last element that I maybe would like to highlight is that, we all discussed, and I think we all agree on the objective of fostering more the competitiveness of the EU. But as some of you said in previous interventions, it has to be a collective endeavor. It cannot just be the Commission declaring we want to be more competitive. We have to make sure that everyone is on board. Of course, the industry is on board, and I can see that most of you are very supportive of this agenda. Member states are on board, but they have to be on board until we deliver the final results. And I know it's a challenge. And when I say member states have to be on board, what I also mean is there must be a sense of sharing a common objective, because too often we see that member states are competing against each other, which defeats the very purpose of what the Commission is trying to do, what the European Parliament is trying to do, or what member states collectively are trying to negotiate, which is to try to create a common goal. If member states are competing against each other, they are creating barriers that then prevent the competitiveness of the EU. So I think what is really important is that we all work collectively towards this objective, and instead of competing against each other, there's a sense of common I mean, a sense of common sense and common good for the EU.
Yes. Emmanuel, MASSE, do you think it's important to work together? What is your assessment of the current situation, and how for you asset management can improve the competitiveness in the EU?
Thank you very much, and good morning to everyone. About competitiveness and productivity, as an economist, I think it's important to have in mind that we have a productivity gap with the US. And having a productivity gap is a very big problem. And this is not easy to solve. So this means that it needs a lot of change, a lot of things to do to try to catch up on productivity if we are lagging behind. And that's where we are now. If we look at the figures in the Draghi report, and there is no silver bullet to catch up with productivity. So it's a big problem. It probably has a lot of different solutions. If we want to try to solve this problem, we need to do a lot of different things. But clearly, something is not working properly in Europe because we are lagging regarding productivity and economic growth. So this will need a lot of change. And I agree with a lot of what has been said. In my view, if you look at productivity...
Do you think it's possible to change?
Yeah, we need more investment. This has been said. This is in the Draghi report. So more investment for the digital economy, for the green economy. We need more innovation, not just incremental innovation, but also disruptive innovation and bigger company. I think the problems of scale-ups is key, in order to have larger company, and larger company in the US are a big part of the new value added, in the US economy. And so we need to have the same kind of company in Europe if you want to catch up. And third point, this has been said a lot, regulatory obstacles are very important, and we need to work on simplification. So we need to do all of that, and we have a lot of report, and 2024 was a year of discussion, 2025 has to be a year of action and consensus on this question. And my view is that if we want, for the financial services, and for asset management, if we want to have this investment shock, and this is part of what we are discussing here, we need a fully fledged investment and saving unions. So we need big steps, and I agree this is not always easy to do, but we are in a position we need to catch up, and we need to do this.
And we hope we are going to succeed. Yeah. Nicolas VERON, as a researcher, you have another perspective. What are for you the obstacles to competitiveness for the EU, both for financial and non-financial sectors? What is your point of view?
Well, maybe that's a lot of questions. I want to start by thanking the AFG, the French Association of Asset Managers. It just happens that I've been in a dialogue with them for more than 20 years now. I see Pierre Bollon in the room. I'm very grateful to him for all the conversations over the years, and to the team now for high quality conversations. I think it is something that has to be highlighted, that AFG, of course, is a trade association. They have lobbying positions, that's obvious. But there is a quality of the analysis that is provided, which I want to pay tribute to. Now, I'll come to your question. We're all for competitiveness. We're all for capital markets union, savings and investment union, whatever the label. Mr. HUEMER said eloquently that what SMEs want is a single market. And I will focus on the single market for financial services. This is what we need. We will achieve that with legislation, and I think some clarity of discourse is useful here. Sorry, you're...
Thank you.
Telling me to speak into the microphone.
Yes,
sorry about that. Where we need legislation, some of that legislation will come from the EU level, not all of it. There is a space for national legislation, and I think it's very important in the debate on savings and investment union to have a clear distinction between what fundamentally pertains to the EU level and what fundamentally pertains to the national level. A lot of the issues that get discussed, and I have many in mind, things like insolvency law, taxation, also pension finance, also housing finance, which was mentioned in the Noyer report. Fundamentally, these issues are national legislation. We may not like that, we may deplore it, but that's not going to change in this term. And I think, therefore, there is a need for the EU debate the debate at the EU level, including at the European Parliament, to focus on what can be achieved in legislative terms at the EU level. And as we all know, we spent 10 years, that has been said by Philippe SETBON and others, debating capital markets union, not achieving a lot. So it would be desirable that the next 5 years achieve something, because something is better than nothing. Here I'm coming to the fifth S, Stéphanie Yoncourtin. You mentioned a number of S's. I will add one. That's supervision. The S of supervision is one in which we know from experience that EU legislation can achieve something, and I would say should achieve something. There has been a lot of emphasis on the three reports, right? We had Noyer, L'État, Draghi. I would add a fourth report, which is the excellent papers that Robert Offel, another French contribution, has produced for AEFR, the Association Europe Finance Regulation, which is chaired by Pervenche Berès, well known in this town. It's a really good report. It goes into more of the details of how to organize supervision in a way that would foster the single market. I actually would go further than what Robert Offel recommends in this excellent paper. And also coming back to Stéphanie Yoncourtin's first S, simplification. I think we need to think a bit bigger. We need to think a bit less incremental. We need to think of what we want to be the steady state and not just the next step. And if you think in those terms, there is space, I think a very strong case for the sake of the single market, and also, but that's more contentious, political possibility given the current momentum, to think radically in terms of supervisory integration. Emmanuel MASSE just told us that 2025 should be a year of big steps and of consensus. I'm not sure full consensus can be achieved on supervisory integration, but there is a saving grace, which is we're talking Article 114, so qualified majority is enough. Thank you very much.
Another S is very important, is simple, and there is currently a debate on a simple and low-cost product to increase retail participation in financial markets. So, Fanny, what do you think, what are today the thoughts of AFG about the concept of such a product? What do you think?
Another product, another label. And
more simple.
Once again, as Hélène said, we've got a very well-known UCITS framework, and I will even go further. We've got a UCITS brand that is super powerful and that we sold everywhere in the world. Asian clients, Latin American clients are buying UCITS funds because of its robustness. All UCITS products are already considered as simple. Why do you want to make another simple label onto the UCITS category? What will it go for? It will confuse retail investors. It will put more cost, more regulatory burdens. It will dismiss the clients from understanding the product purposes. It will emphasize simple meaning cost, and then we come back to the debate on what is SMEs, what is ESG, and how do we do it. We just need to avoid that. UCITS products are already simple products, and they are already a very good, sane, and safe competition within the UCITS product. We should be all very proud of our UCITS brand. This is one of the stuff in the financial markets that we most successfully exported. For once, we exported something. This is our UCITS brand. Then if I come back on your question, the retail financing, simple product, because if we make simple product, then we will have more adoption on the retail participation. The retail participation is not linked to any label on capital markets. If we want to get retail adoption and more retail adoption, we need to simplify. Simplify the administrative burden, help them getting much more financially educated, because there is a lack of financial education across the board in Europe. And as simple as that, put the good tax incentive. Retail investment is getting into where there is a tax incentive.
Hélène Bussières, do you agree? What is your opinion? Do we need a new product? And what does mean simple for you? Or low cost? It means low cost?
So I think there are two elements in your questions. In your question. So first of all, the discussion on building or developing a new product. I think to be clear, the intention is not necessarily to create a new brand or to develop something a bit out of the blue that would complement the existing product offer. I think it was said already very clearly by others, in particular Fanny. We have very simple products already available in the EU. I think there's no intention to develop a new framework. We have like the UCITS brand, of course, but we also have like now the LTIF, which is another possibility for investors, like more sophisticated investors who would want to invest in more elaborated investment strategies. So I think the product range in Europe is relatively well developed. I think the intention, discussion behind this idea of developing a simple product is more on how to make sure that retail investors more spontaneously invest their savings into investment products. And therefore, what I think we all have in mind, in fact, is not a new product as such, but it's more like a new account or a wrapper that can be at the receiving end of different types of simple products. On this, there's, I think, broad agreements. There are different ways to achieve that, but I think there's agreement on the fact that a simple account should be available to all EU citizens. I think the French, because we're speaking in front of largely a French audience this afternoon, I think France is not a good example because there are many investment accounts already available, with good tax incentives and quite attractive. So I think France is not a good example, but there are many other member states where such options are actually not available to retail investors. And I think we would want to use best practices. We would want member states to share their best practices to make sure that investment accounts, simple investment accounts, are available across the EU. Now, let me add one thing, because I think the tension behind this discussion on the simple investment product is mostly linked to the fact that people perceive the discussion as being limited to ETF. And I think there's a lot of nervousness on this discussion, simply because when we discuss simple, low-cost product, people immediately understand it as meaning encouraging investment in ETFs, which I know is a very contentious topic, very difficult discussion that maybe we don't have, maybe we need to discuss that in more details at some point, but I think there's no intention behind any of the elements or any of the points that the Commission has put forward to promote just ETFs. That's not at all the intention. I think there are many actively managed products that also have a lot of merits that are also low-cost products. So I think we need to have a bit of a more educated conversation around this idea of developing a simple and low-cost product, clearly not limited to ETF.
Fanny, you want to add something?
We all agree on the intention, but we really need to make sure that value for money is meaning good quality for the good cost and not low cost. At the end of the day, if we all agree, we have to finance some small and mid caps. We have to finance green transitions. All of those companies, all of those intentions are more costly to produce. So at the end of the day, the dival will be in detail. We all agree on the intention, but the race to the bottom might be counterproductive towards all of the challenges we have in Europe, maintaining our economies, financing our economies, and financing our green transitions. And once again, value for money is good, but it is good quality for the good price and not low cost.
Nicolas Véron, what do you think about that? What is your opinion?
I haven't really written about this, and I want to be cautious in the way I say it, but it is true that when you live, as I do, in the US and in Europe, kind of at the same time, I have a home in the EU and a home in Washington, DC, the investment environment in the US is so much more attractive. It's just some things that, blows your mind when you have that experience. And I think we have to just, understand the differences, understand what creates that gap, and look at it honestly.
Gerhard, do you think that a new simple and low-cost product could help financing the European SMEs?
I'm quite skeptical about the new European product in this regards, because I don't see the possibility to create such a European product which will be low cost because of the already mentioned tax incentives, insolvency stuff. But what is important to understand is that we have very different situations in Europe where you have tax incentives for investment products and tax incentives from companies to take them, and you have countries where it is disincentivized to invest and disincentivized to take equity in your balance sheets. In this regard, France is a good example, and other countries are a bad example. And if we want to mobilize more capital or savings which can be used for equity investment, to transfer into equity, then this incentives has to be created, and this can be done at national level. There's no need to do it only at European level. And then it may become also more attractive for SMEs to take them, because at the moment in some countries is absolutely not attractive. The tax advisors tell normally, take a loan. It's much better for your company. Only if you are fast growing, then you need equity. For the rest, equity is not interesting. And then auto-enrollment and tax incentives make a sense, but I would not prioritize a European solution.
Emmanuel, Massid, what do you think? Do you agree with what he said?
Yeah, I agree with many things which has been said. Just a few figures to have in mind. This has already been said. I think this is important in this question of products and savings. EU households still hold 32% of their financial asset in cash and deposit, compared to 12% in the US. US households invest nearly 50% of their savings in equity and investment funds, compared to about 30% of the European counterparts. So that's partly why I think a label might be a good idea. I agree with you that probably could not be at the European level because there are a lot of taxation issues, so maybe it's more an intergovernmental approach, but this is important to have the signal, you know, in order to say we need to invest more and take more risk, be more risk prone, and the tools we have as authorities, this is taxation, you know. The taxation is a way to say, okay, we think that it's important to have those investments for the EU economy. And what is important too, and this is a discussion we should have, it's about the allocation, you know, of this product or this label. Is it a European allocation exclusively, or how diversified the saving the product should be? And this is also an important question, and we think that it's important that when we have low level of taxation, you know, we have an incentive to invest in European, you know, companies, and not just all over the world, even if it's at the price of less diversification, you know. And that's an important question.
Hélène, Bussières, do you think perhaps we need, for a solution, we need perhaps a label? You told us we need better finance innovation, scale-ups, deep tech. So what do you need? What could be a solution? A label could be a solution?
So, I mean, to the issue of funding the economy, I think it really depends on the level of maturity of the companies. I think we discussed already the case of startup and scale-ups, for which there is a funding gap. I think that we can't contest. And for that purpose, we need to build and facilitate access to funding options in the EU. I mean, I think one of the biggest challenge for financial services and for the EU capital markets is the availability of bigger tickets, bigger funding tickets. Like it's the case in the US that it's extremely easy for late-stage scale-ups to have access to hundreds of millions of euro almost immediately, even billions of euro, I think I should say nowadays. The same isn't true for the EU. So we need to address this problem. I think it's partly linked to the fact that we have very few growth capital funds in Europe that have a certain level of development that have been able to scale up themselves, if you want. There should be sort of a parallel between the maturity of the growth capital funds and the maturity of the scale-ups, and we are not in this situation in the EU. So how to address the issue of lack of scale of growth capital funds? And once again, that brings me back to this discussion we were having before on the single market and the fact that there are still too many barriers, legal barriers, tax barriers, regulatory barriers to cross-border operations of growth capital funds. So I think that's really something that we would like to address in this mandate. So that's for as regards the funding opportunities for innovative companies. I think another important aspect of this conversation is on how to ensure that medium-sized companies, including listed SMEs, which at EU level do have a certain size, but they're still relatively small compared to big blue chips, in particular US blue chips, or even like the bigger companies that we see in the big EU indices. I mean, how can we ensure that those companies also have visibility for investors? I mean, those two companies are not all part of indices. So,
and what is the solution?
So, question is precisely as we were discussing before: how can we ensure that, especially for those exchange-traded funds that track indices, how can we ensure that part of this money goes or tracks EU indices? Meaning the money doesn't only go to US companies, which have easy access to millions of investors, but how can we ensure that there's a growth also of index tracking funds tracking EU benchmarks? Maybe also possibly an option would be to foster the growth of active ETFs, which are growing in the EU, but maybe we need to accompany this trend. I think the question also of, but then we go into more the MiFID world, but like research, availability of research for smaller companies is also an important aspect. So I think we have a lot of levers, and we need to activate these various levers at the same time, because as we discussed before, I think it's a matter of urgency and acting as quickly as possible.
Yes, Fanny, first we have to increase retail participation and investment in Europe. So what does AFG suggest? Do we need a label? I ask again.
As we say, no more product, but maybe a label. At the end of the day, our association is promoting long-term investment. And we all agree that the PEP was not a great success around Europe, so we don't think that another product can be a solution. However, and once again, to come back to the first S of Mrs. Jan-Courtin, simplification. A label that will mostly promote substantial investment in the European economy with a long-term focus and the good tax incentive will by definition drive actually the assets of the savings industry into it. Then, is it more large cap, small cap, whatever, gives the choice to investors. And the competition is already there.
If we look to the future now, to make funds more competitive, we obviously need a significant regulatory framework, but one that is not too restrictive. So, Hélène Bussières, you know, the competitiveness compass of the European Commission has been released last week. The simplification agenda and the savings and investment union project are expected to be published respectively by the end of February and of March. So perhaps could you give us some insights of those key initiatives for the financial sector? So finally, what can we expect?
Well, I wish I could give you already the list of what's going to be featured in those proposals, but a lot of things are being discussed, I have to say. So it's literally in the making as we speak. So I can confirm that the first simplification package will be adopted at the end of February. It's the first of a series. I think it's been announced already by the Commission that there will be several simplification packages adopted in 2025. The first one will focus particularly on sustainability reporting, CSRD, CSDDD, the taxonomy regulation. I think it's quite clear. I mean, I can't give you the details because we're still discussing different options. I think the challenge of this exercise is how to streamline, how to reduce the regulatory burden. I think the request is pretty clear. There are quite a few challenges. First of all, the EU and a lot of EU actors were already preparing for this transition, and they were quite advanced, in particular in some member states. So how can we deal with the situation of those member states where actually companies and stakeholders were already quite advanced, and it might be costly also for them to go back. So I think we have to factor that element into account. It's very important.
To transpose CSRD.
Yeah,
so what can you tell us about that?
Absolutely, and this is really important. So the competitiveness compass, we think that's good to have in the competitiveness compass simplification as one of the first part of this compass. So this means that this is a really important topic, and we think that it's possible at the same time to simplify, and this may have a quite huge impact on the growth in Europe, you know, and this is very significant, and we think that it's possible to simplify and at the same time, you know, to keep the objective of sustainability. So this means that as it is now, if you look at, and you know that perfectly, but if you look at the report you need to do with CSRD, you know you have a lot of data points, you know you have level 1, level 2, level 3, you have a lot of things to do. Not all of them are necessary, so very important to go into that direction and simplify. So I don't know what the proposition of the Commission will be, but for France, we think that we need to focus on larger companies, you know, and have lighter reporting for medium-sized companies. We think that I'm talking about CSRD, as you know. We should have a cap, you know, on the value chains, meaning that we will stop having all the value chains concerned with the CSRD report, or with a lower level of requirements. And the last one is about the question, which has a lot of been discussed, about the 2-year postponement of the entry into force. This is a question for France, because we already transposed the legislation. So if we want to do that, we have to know how to organize, you know, things, because that's not, if you transpose it, you have to apply it, you know, it's not kind of, you can say, okay, I don't care about that. So that's a big question for us. Hope that this is just the beginning. This is the first omnibus. We should have more of them, you know, in the coming months from the Commission. This is important. We have a lot of other topics. I want to be popular, so I will say we need probably something regarding RIS, regarding FIDA, and so on. And we think that it's possible to simplify all those legislation, and we need to work on that with the Parliament, of course, and the Council and the Commission.
Gerhard HUEMER, as the representative of the European SMEs today, what are your expectations, notably on the simplification agenda? What do you expect?
And even SMEs are not covered by the taxonomy and by the CSRD. It's currently our biggest concern, because we are confronted with trickle-down effects. Banks are asking for a lot of reports, every bank a different report. Supply chains doing the same, and therefore we invested a lot in the last year to create solutions for this problem. We are on the one side, we are ready with the voluntary SME report, which should be sufficient for supply chain and banks and financial institutions in the context of CSRD reporting. And we have published today the usability report of the platform of sustainable finance, which includes a streamlined and simplified taxonomy for SMEs, which both approaches are not reducing the ambition, it's only reducing the reporting requirements. And what we expect now from the first omnibus regulation is that these two solutions become a reality, in the sense of that making the VSME standard, let's say, as a standard reporting tool, helping to implement this with guidance and electronic portals, and are also making the streamlined approach a possibility for banks to change the GAR, for example, to report in a different way their sustainability of their projects.
Funny words, perhaps a few words on the simplification initiatives. Do you think it's going on the right direction?
Yeah, I will, just to conclude, I will just say we need to simplify the simplification. Oh. The simplification should have two simple objectives. At first, to enhance the competitiveness of the European economy and actors. And second, simplify the retail access towards capital markets. Simplify the burden, simplify the administrative, simplify the test, make them access the financial markets.
So another S is about supervision, and that's what we need to have supervision. We need supervision, but today we have an hybrid architecture with national authorities and ESMA. So Nicolas VERON, how should this evolve? What do you think? What is your objective? What do you think?
Well, since you ask.
So I think you work a lot about this subject.
Yeah, and I have a forthcoming paper because I'm paid for that. But I was intrigued by the Compass sentence, which says we're going to work for a much more unified supervision by the standards of European Commission coded language. This is actually strong stuff, or at least that's how I read it. and I encourage the European Commission to be bold. I think what we need is radical simplification. There's a lot of complexity and dysfunction and opportunities for regulatory arbitrage and financial stability problems down the line, and market distortions that come from the current awkward halfway house, as you mentioned, Isabelle, between the national and the European levels. The way that was addressed in banking, I think very successfully in terms of the supervision, was through a hub and spoke architecture. So the European banking supervision, as you know, we have the ECB, we have national competent authorities. I think it was a little bit of a shortcut of the Draghi report to say, okay, this has been successful, let's do the same in capital markets, because it really doesn't work the same way. You have banks in every member state, you don't have every capital market segment in every member state, even so, arguably, you have asset management firms in every member state. So I think we need to think about the supervisory design for capital market supervision on its own terms, not just copy-pasting what has been done in other areas such as banking, prudential supervision, or for that matter, anti-money laundering. The more I've thought about this, the more radical I've become. I think we need a radical step, and the radical step is actually having, as Christine Lagarde told us more than a year ago, a European SEC, or more accurately, a single capital market supervision for the European Union. But that means it cannot be the ESMA we know. It has to be a fundamentally transformed ESMA, and particularly an ESMA that has presence and connectivity in every member state. So that's a multi-centric ESMA, if you will.
Do you want to change the model?
I think the model has to be one that we don't really have in the EU. There is no exact precedent for it, but it doesn't generate any legal problem, which is a European regulatory agency that has offices in every member state, that has a multi-centric structure, but is a unitary organization without the kind of political compromises we may have maybe in the current build-up of ESMA. And I think that can do the job. It can provide the best of both worlds, having the local knowledge, the local connectivity, the proximity to market participants that provides time to market and accurate, appropriate supervision, but at the same time powerfully promotes the single market, which should be the objective of that reform. So I think here we shouldn't think in terms of incremental steps. We should take a step back and look at what is the right design for European capital markets, and then just do it.
So, Emmanuel Massé, do you agree? And for you, what place the supervision does take for you?
I clearly agree with what Nicolas just said, with regard to supervision. I think this is a very important point, for the SIU, and this is, we need to go forward on that. And if it's not possible to have a full SEC, we should try to focus, on some starting points. And we as France, we propose two of them. The first one is to mandate the ESMA with the supervision of systemic infrastructure, CCPs, CSDs, and that have cross-border activities. This is the first proposition, and this is a way to have the ESMA, growing and supervising important institutions. The second one is about asset manager and European size asset manager and their funds, and we think that would be a key levers, for increased competitiveness in Europe, to have this common supervision on that. This might be an opt-in, it has been proposed as an opt-in, if it's too difficult to do, to be compulsory, but even if I understand what Nicolas says, having a big step, if it's not possible, making steps in order to have more supervision for the ESMA is very important. At the end of the day, supervision is really a key question for the Saving and Investment Union, and we need to progress on that, and we will try to do.
Funny words. What is the point of view of AFG about this idea of unified supervision? What do you think?
We do think that we need to have a pragmatic approach when it comes to supervision, like efficiency and no over-complexity. And as invited by Stéphanie Yon-Courtin, we listen to the people that are in real life in the room to express what they see. In asset management, we need to differentiate the entity level, which is the company, than the product level. At the entity level, we need to recognize the notion of group. Some of our groups are operating in many countries, and sometimes the regulations are contradictory, which is then obviously creating complexity and, if not, nonsenses. For the product, there is something that we did well, which is the cross-border distribution, very well achieved in Europe. But the local product supervision remains in the local hands of local supervisors, and then there is significant divergence. If I just take some example, launching a product in the EU can take from 1 month to 6 months, depending on the local supervisor. So there is obviously some room for improvement, but we are all positively hearing that there will be simplification, so we know it will be addressed.
So Gerhard, perhaps the last word about that situation, and after Hélène Bussières for the end, because we are going to the end of this one table.
We don't have a lot of opinions on the supervision stuff, but I think without a European supervision, we will never have a European capital market.
Hélène Bussières, at the end of this round table, perhaps a last word.
I mean, I can simply note that we have like mountains to overcome in the next mandate, ranging for more simplification. I mean, for simplification, going as far as possible, but at the same time, going for like more, maybe not central supervision, but more convergent supervision, which will require probably more legislation. There, I fully agree with Nicolas.
Thank you. Thanks all of us. Thank you to applause them.
So thank you very much for this lively discussion and panel. Now I'm very pleased to call to the stage Delphine de CHAISEMARTIN. So Delphine de CHAISEMARTIN is Deputy CEO of AFG, and she has the difficult task to conclude this conference before the cocktail. Thank you.
Thank you very much, Louis-Marie. Indeed, this is quite a difficult task. However, I wanted to conclude this conference on a positive note. I think these discussions have been very insightful, and I think there is something that is clear, that we are in a turning point. We really need a financial ecosystem where savings support European businesses, investors benefit from strong returns, and Europe's economy becomes more competitive on the global stage. And that, on those priorities, I think we are all aligned. And if I may say so, Louis-Marie, you introduced the conference saying that we had to we went over a lot of blocks to organize this conference, last year with the tracks, this year with the subway situation. But we have currently, if we are a bit informed about the astronomy, we have a planet alignment. It's a one-in-a-lifetime planet alignment. And I would like to draw a parallel with the discussions today. So we have, between industry priorities and the European agenda, quite an alignment. The first point is that competitiveness is now recognized as a top priority by the European institution. This is a big step. So let's take advantage of this unique moment to make meaningful steps towards simplification, focusing on enhancing the competitiveness of the financial sector. But what we need is a clear roadmap for action. And as AFG, so we represent the French Association of Asset Management, we are fully committed to this agenda. We are fully committed to contribute more and provide studies that we do today about the household savings in Europe and how we finance the European economy. But if I want to go back to the S of Stephanie Joncourta, simplification. I will add that we need simplification, we also need harmonization. So simplifying, harmonizing regulation is key. Let's get a regulatory framework which enables our industry to compete at arm's length, because this is not the case today. So we have to keep in mind when simplifying and harmonizing that we need to be able to compete at arm's length. Rules must support, not hinder investment. Overly complex regulatory frameworks currently discourage savers and businesses alike. So a more smarter and efficient approach is needed. We're talking about savings. So let's build an investment, a savings and investment union that provide capital to European businesses. As we mentioned, and Fanny mentioned it, we have products in Europe, maybe not everywhere, but we have products. What we need is to promote these long-term savings solutions that provide capital to European businesses. So we are convinced that the EU label, InvestEU label, could be a game changer to ensure that savings are invested into European equities and long-term projects. But for this to work, we need to inspire from what works best in the world. And you can look at our studies about the household long-term savings in stock markets participation. There are some criteria that are very impactful, such as auto-enrollment, life cycle asset management, flexible but limited withdrawal options because we want to invest long-term, and strong incentives, including favorable tax treatment at the national level. And I would say a strategy or retail investment strategy, as Stéphanie Courtin mentioned. Well, let's talk about fair pricing, not low cost. Let's not fall for the illusion of low cost. Low cost is not a guarantee. You will get what you're paying for. So what is important is the focus on value for money. It's more meaningful than focusing only on cost. Let's ensure that the prices reflect the quality of services provided to clients rather than prioritizing low-cost products. Supervision, I mean, we already said that, Fanny mentioned it. We are promoting a pragmatic approach by first recognizing the notion of group for asset managers at the EU level, preventing them from being regulated separately by up to 27 different national authorities today. So the alignment between industry and policymakers is an opportunity, but action is what matters. And as Philippe said, this is the time to act. So we must work together to remove barriers, simplify rules, make Europe an attractive place to invest. And by taking these right steps today, we can create this financial ecosystem that truly serves European citizens and businesses. In conclusion, I would like to extend my sincere thanks to all the participants, including Member of the Parliament Stéphanie Courtin, our President, Philippe SETBON, the roundtable speakers, including our Vice President Fanny Wurz, Hélène BUSSIERES, Emmanuel MASSE, Nicolas VERON, and Gerhard HUEMER, and the moderator, Isabelle Gounard-Lévy, for the thrilling and very insightful discussions. I would also say a special thanks to the Brussels team led by Louis-Marie, and the communication team led by Caroline Richard and Marie-Elisabeth Rosenweg for their efforts in making this event a success. Thank you to the AFG expert teams and our members for their contribution on a daily basis and support. I would also like to thank Thomas Valli, our chief economist, who are at work every day to produce the studies that we are going to be published today, as well as Stéphanie and his team. The European Observatory of Savings and Deloitte for their contributions and insightful studies. Finally, it was short. Thank you very much for being here today, and let's enjoy a drink. Thank you very much.